Hey everyone, welcome to the KE Report, a daily editorial on Monday, June 16th, chatting with Craig Hemke, founder and editor of TF Metals Report. Now, we're going to focus on the precious metals as we always do with Craig pretty much on a weekly basis. But Craig, before we get into some interesting moves in the silver CoT report, as well as some of the catalysts or potential catalysts for the precious metals coming up, one market move that we always pay close attention to and we always hear it's inversely correlated. Sometimes it's inversely correlated. There's always a debate out there in terms of the dollar, what the dollar is doing, and how that's impacting precious metals or even commodities broadly. The dollar continues to be weak. As we're recording this, it's fighting back a little bit of today, but it is below 98. So it has 97 with a few decimal points behind it. That is very close to breaking to levels that we haven't seen since 2022. So multi-year lows, and undeniably from how the US dollar entered this year around 108, 109, now being at 97, that's a big move for just half of a year. So Craig, what's your thoughts on the continued weakness of the US dollar and how that trickles into the precious metals space?
Well, hi guys. Yeah, another interesting week behind us, another interesting week ahead. That dollar question is always, the answer is always multifaceted. I mean, first and foremost, you can look at the price of gold and go, hey, it's $3,400 US dollars per ounce, or, whatever it is. And you say it's gone up from $3,000 an ounce or $2,000 an ounce. And people say, well, is that expensive? Well, is the gold going up or is the dollar going down? I mean, because the gold's not changing, right? I mean, it's still the same ounce it ever was. It just now takes more dollars to buy that same ounce. And so it actually implies that it's a dollar that is weakening. It's not so much gold getting stronger. And so therein lies your connection at the core fundamental part of it is that a weaker dollar implies stronger gold. As it relates to trading, that's kind of a function of any given day, how light or heavy the volume is that's being produced by the algos, the HFTs, the CTAs, whatever you want to call them. Because to my eye, at least, it seems that there's a programming that has been done by computers that just simply see, an uptick in the dollar index, and then they sell gold futures or silver futures or whatever commodity, you might be talking about. Oh, you can see it. I mean, watch this week. The Fed lines from the FOMC will come out at 2 o'clock Eastern, have up a chart, a 1 minute chart or whatever of the dollar index and a 1 minute chart of gold, and you'll see them move inversely, tick for tick. So it depends, like I said. So the impact on a trading basis on daily is how much of the volume is being done by computers. And then there's other days where it's not that great of a percentage. There's more human beings are taking more fundamental factors into play. In general, for trading, think of it as a tailwind or a headwind. As you said, the dollar index has fallen. I was 110 in January, and now it's down here at 98. So what's that, 12, 13%? That is a large part of why gold is higher and why silver is higher this year. And that would catch a lot of people by surprise. This 98 level is a pretty important support level. It's where it bottomed out back in the middle of April, at the same time that gold peaked at the middle of April, just north of 3,500. So if this 98 gives way, and the weekly chart looks not very enticing, if the 98 level gives way and we go to 96, 94 as we go through the summer, you're going to get a summer rally in the precious metals just because of that tailwind. So there's a long answer, Corey, probably more than you bargained for, but I tried to sum it up as briefly as I could.
Well, Craig, thank you for that. It was a great bargain. And when you think about it, people were talking about the dollar, the $100 level being a strong support. Then they were talking about 99 being strong support. Then they were talking about 98 being strong support, or 97.50. So I would say that the dollar is weak, but like you're saying, when we look at the commodities themselves, it is a tailwind. You're seeing silver up, copper up, platinum up, aluminum up, zinc up. So it's not just a gold thing or a silver thing. It is a tailwind for the commodity sector. Not perfectly, and it's not always inversely correlated, but it's definitely the wind at the back of the commodities. When you look at silver in particular, the pricing's above 36, which again is another key inflection point above that 35 resistance. So a lot of technical levels being triggered on all these charts, whether they're currencies or commodities, but it is looking a little top heavy here. And so some people are worried that silver is at that precipice where it could suddenly blast out of this zone and really rip higher, or it could look like it's getting a little weak technically and overbought and maybe it needs to sell off. You had a unique take on things by looking at the CoT report for silver. A lot different picture than the CoT report for gold. So maybe break down what you're seeing on the COTs.
Yeah, I keep track of these every week. I've got a stack of handwritten COT summaries that go back about 10 years on my desk. Not the most efficient way of going back in time and saying, oh, the last time it looked like this was, whatever. But it does allow me an ability to do it. And that's where the COT position, where there's total speculative positions and the commercial positions, that's where understanding the COTs, that you have to have that kind of historical reference for it to be any value. Otherwise, it's just numbers. And so when I look at this, after watching these reports for 15 years, is there certain levels, whether it translates just to straight up amount of contract open interest, or whether it's the positioning by a large group like large speculator or smaller subgroups like hedge fund, there are certain levels that you get to that you don't seem to go any higher, as if there's kind of a finite level of market participants. I mean, we all talk about silver being a small market. So, you get up to that 180, 200,000 contracts of open interest, or you get up to the net position of the large speculators. I mean, that's a kind of a mouthful. You get that up to 70, 80,000 contracts. That's typically where you get to when the price starts to top out. You think of the market moving, 2 steps forward, 1 step back, or sometimes 2 steps forward and 3 steps back. You move forward while the spec buying interest is coming in. And they're looking for exposure in silver. And it's these hedge funds and trading funds and the like. And as they're buying, price is moving higher because you got more buyers and sellers. At some point, though, unfortunately, you run out of buyers. It's that finite number that I've seemed to see in the past. And you just run out of buyers. And now all of a sudden, you got more sellers than buyers. And then price starts to stall out and it starts to break down and maybe loses an important technical level, and that gets machines to start selling instead. And that's my concern with the COT report, is that at least from my perspective, and from a historical basis, we're getting pretty heavy in terms of all the usual buyers may have bought. That doesn't mean price can't go higher. There could be more buyers come in. Gold, on the other hand, does not have this situation. And in fact, the move from about the early part of February till even just a couple of weeks ago was not driven by hedge funds and CTAs and the like buying. They've been selling. The move has largely been driven by short covering out of the commercial sector. So you could get that. It could happen in silver. This would happen back in April of 2011. But that's, kind of pinning your hopes on having that type of thing happen to drive price from here 36 to 48. I don't think it's one that I want to plant my flag and cross my fingers. So my concern is that, again, another long answer, I apologize, but the July silver is the current front month. That's where all the trading activity has been for the last 60 days. That contract not only has options that are going to expire on COMEX next week, that contract's also going to go off the board, which means there's a lot of liquidations that are coming, especially on the long side. You won't get those positions fully rolled, and so you'll see open interest coming down. That's kind of a net selling. If you've got 100 longs and 100 contracts long in July and you want to move it into September, but you sell 100 and you only buy 50, I mean, that's net 50 contracts of selling pressure. That's how this kind of situation might work itself out. Anyway, again, apologize for a long answer, but in the short of it, I'm a little not necessarily pessimistic. I'm not optimistic about price for the next week or two, and then we'll just see where we go as we get deeper in the summer.
Craig, how does this all play into the gold-silver ratio? Because 100, that means gold's worth 100 times more than silver. That doesn't happen very much in history, but that ratio was just up to around 107 a couple months ago. Really come back from that, but still, even at the current level of, let's say, mid-90s right now, mid to low 90s, that is historically very high, which means gold is, I guess, historically overvalued compared to silver, but a lot of people put a lot of weight in these ratios. I think they're more for trading purposes when we do see extremes hit. But what do you think about the current, let's say, mid-90s level of gold to silver ratio?
Well, I promise this will be a shorter answer, Corey. I really don't pay much attention to it. I know people even actually try to apply technical analysis to that ratio, which, hey, look, knock yourself out. I'm not going to tell anybody whether they should or shouldn't do anything. I do know there's folks on my site that, for trading purposes, will kind of toggle their positions a little bit based off that ratio. You get over 100, they'll start liquidating some gold and moving into silver, and then, you get down, that falls off, the ratio falls off, they might go silver back into gold. I wouldn't surprise me. Again, geopolitics notwithstanding, and the assorted craziness we might see over the next couple of weeks, I wouldn't surprise me at all to see that ratio go back to 100. If I'm right about silver being a little heavy into these July expirations, yeah, $3,400 gold and $34 silver. That wouldn't surprise me at all. And then, like I said, we clean out some of this heaviness in the CoT report, get the dollar to keep going down. We could have a decent rally in silver in July and into August.
Well, Craig, just following up on silver, another indicator I've been watching is how the silver equities have been reacting to these higher prices. And we saw a big lift in silver stocks 2 weeks ago when silver got above 33 and then 34 and punched up to 35. But then that week, 2 weeks ago, it ended at 36 on the week, which was the highest weekly close in 13 years, and the silver stock sold off. It opened up last week a little up, but after a lackluster Friday. And then during last week, even when silver was holding in the 36 range, which you think would be incredibly bullish for the silver producers and for developers' economics, these stocks haven't been as strong as they were when silver was going to 33, 34, 35. It seems like the momentum is being lost. And even today, silver's up, but the silver stocks are down. SIL and SILJ both down for the day, even while silver's up. Do you think the silver stocks are signaling that investors don't believe these prices are going to stick?
I don't know if I want to read too much into it, Shad. And at the same time, I'll contradict myself by saying one of the reasons I bought for myself a call on COMEX Silver a couple of weeks ago, that was a pretty good trade, was because the SILJ, the SILJ, had taken off and was rallying with silver still kind of lollygagging around 33 and a half, 34. And I thought, well, maybe there's something to this. And then maybe it's just coincidence. It ended up the price kind of followed that. The silver price followed it. So again, like I said, I'm kind of contradicting myself. And now that the SILJ is kind of stable and not kind of pulled back, what, 2 or 3% from its highs, that maybe it's not for, maybe now it is still foreshadowing now some weakness. I don't know. It's tough to say. I think the bigger picture with the silver miners is one, there's just not a lot of them that are, really very large market capitalization. And the second part, it still just remains just an unloved and underinvested sector. And so because there's not a lot of dollar volume and not a lot of big positions, there's not a lot of people, just like getting in there and buying them and holding them and all that kind of stuff. You just get this kind of small pool where the money kind of rushes in and pushes everything up, and then the money rushes back out and pushes everything back down. And until we get a more substantial interest in the sector, again, I think that day is coming, we're probably still apt to see just kind of an outsized impact on some of these prices just by a small flow of funds.
So, Craig, to me, it does seem like there is more interest coming in, especially to the silver miners. You look at the SIL chart, the volume we've seen over the last 4 months, including this month, is record high volume, and that's even at some higher prices, right? So there is money sloshing around the system. It does seem like a lot of it's probably filtering over from gold, but what indicates to you if silver gets a whole lot more interest outside of what I'm looking at, just volume increasing again to record high levels in the last 4 months?
Well, it's a tough thing to measure, Corey, but you might just even just look at the market cap. As you were speaking, I was trying to pull up what the market cap is of the SILJ. Do you guys have that? I mean, it can't be. I mean, GDX is like $15 billion or something like that. The SILJ must be, I mean, is it even half that?
It's $1 billion, Craig. 1 billion, 1.13 billion. Yeah. So not a very big market. And again, it's got some big volume a couple weeks ago, but its volume has really trailed off the last couple weeks.
And yeah, I mean, again, what Nvidia, I mean, think of the dollar amount that trades in Nvidia on a daily basis, And then $1 billion would buy you the whole freaking thing of the silge. That'd be kind of fun. Think if you were like, you know, a multi-billionaire guy and you just had like 10 bill laying around. You took that silge private. You just bought the whole damn thing yourself. I mean, which is laughable, but it's also not inconceivable. So that's it. Corey, no doubt, dollar volume, I guess is peaked, and I hadn't seen the number about where it is, historically versus 2011 or something. But gosh, we're still a long ways away from, if we're right about silver, and there's so many people, I mean, I'm not going to sit here and say it's going to 80, but there are a lot of people that say that kind of stuff. And if they're right, those silver miners are going to be making a lot of money. And you would think that would inspire some investment in the sector.
Well, Craig, in a general sense, gold has been the leader in the precious metals and always is. It's the prime mover. And then you see the catch up in GDX, you see the catch up in SIL and SILJ, you see the catch up in silver. At least it's made a little bit of progress on the gold silver ratio. But if gold is still the prime mover and it's been stuck channeling sideways, what do you think moves gold higher in the longer term? What forces, what macro forces could push it up in not just above 3,500, but make the trek towards 4,000?
It's got to be a continuation of, what it's been for the last 3 years, really. Yeah, you guys will remember all the times we've talked this year about the annual forecast I write every January, and what did I get wrong? What I missed? Because I didn't see last year coming. I mean, I thought we'd get to 22 or 2,300. We got to 27 or 8. I thought this year, a really good follow-up year might be 3,100 for a high. And what have we been, 35? And underlying this just consistent move of higher highs and higher lows seems to be central bank demand. This is relentless. Another 6 metric tons last month for Turkey. And as long as that type of physical demand continues, just not necessarily buying the dips, but just consistently underpinning the market, that just kind of keeps the price going higher. And then on top of that, you throw in the dollar weakness we mentioned earlier, the prospect of not only the Fed, but other central banks around the world moving toward easing, the global debt situation where the U.S. just printed the monthly treasury statement for May, $316 billion in new debt. That was the deficit for May alone, which is like $100,000 a second? No, hold on. Yeah, $116,000 a second in May. That's how much debt the U.S. added, $116,000 a second. So those kind of things, again, and just kind of wrap up where we started. Why would maybe, gold's always going to ebb and flow in the short term and the trend and money flowing in, money flowing out, and where are you versus moving average and all that kind of stuff. But in the long term, fiat devaluation, not just the US dollar, but the Canadian dollar and the euro and the pound and the yen and the yuan, and you go around the planet. It's just consistently because they just keep creating more and more fiat money to manage the debt and keep the, all that whole everything going. Just going to take more and more of that fiat to buy gold, silver too. And so that's kind of the long-term bullish case, I guess.
On that point, too, we've just seen huge central bank demand. Something we've been talking about for the last few years, but man, especially the last 3 years has been record high central bank buying and record high by almost 100% from what we saw post 2010 and back in the 50s and 60s. So yeah, gold is definitely has that central bank put behind it. And that's the interesting thing I feel about silver, though, is that central banks aren't buying silver. So that money is finding its way into silver. And that's, in a way, a different driver because, again, central banks don't buy silver. They buy gold. And boy, oh boy, have they been buying record amounts of gold in the last 4 years. And now gold is also the second largest reserve asset held by central banks behind the US dollar. So, Craig, just more points there for, I guess, the gold investor to stick behind and say, look at the demand that we're seeing, not just investment demand, but so much central bank buying as well. Craig, thanks for your time today. Always interesting chatting precious metals with you, especially in this simply much better and bullish environment that precious metals are in. If you want to follow along with Craig, click the link in the show notes to visit tfmetals.report.com. Craig, thanks for your time today. We'll chat again next week.
Thanks, guys. Have a great week.